Now that we're at the end of the trifecta, we're at the end of a week, we're at the end of a month, and we are at the end of a quarter. We're going to take a chance to look at the price action on US30. We're going to analyze it from the top down, starting on the monthly, going down to the 4 hour, marking up some spots. But before we get too deep into the chart, I did want to ask what type of content. I'm considering making a video on one of these three topics. Some topics that may be helpful for people who are getting into what we're doing here. And the first possible video that I could do would be a review of the 4 mentorships that I've done, the courses that I've been a part of. The 3 paid courses I've done are Vertex, Phantom, and Mentfx, and of course the free one is ICT. If anybody would be interested in a video like that where I kind of go over the pros and cons, compare and contrast, not just the courses but the different communities, the different styles, although they're all smart money courses, but just how they're different and what you can expect from each one depending on maybe your level of experience. The second possible review I could do would be of the 4 prop firms that I've taken challenges with. I've done a trial with the FTMO, a few of them actually, but as far as the paid challenges that I've done, the first one I did was Funded Trading Plus, and then I've also done in order Smart Prop Trader, the Funded Trader, and my Forex funds. My Forex funds is who I'm currently with. Or I could do number 3, a review of the steps that I specifically took to go from a beginner to a profitable trader funded in less than 24 months. If anybody would have any interest in any of these 3 topics, you could just drop a comment of which you would prefer or the order in which you would prefer them. I know when I was a new trader, these were topics that I was very interested in, and so I consumed a lot of content before I made decisions about which courses to choose, which prop firms to try, what steps I needed to take, because I didn't want to waste a lot of time and I didn't want to waste any money. So if you've got opinions on that or something you may particularly enjoy, I would appreciate some feedback on that. Maybe it'll be helpful. So we'll get into the chart breakdown. So this is the monthly chart here. Everybody is familiar with the Dow Industrial Index, US30. And this YM, if you're a futures trader, it would be the symbol for the futures. It's going to be obviously the same price action. Back before Christmas, price dipped down into this large monthly demand zone that had been created at the end of the year of the COVID years. We were coming out of that COVID dip, so we have dipped into that price zone. So I'll drop down to the weekly here and add my weekly zones. So one thing that was important for me to recognize, and I didn't take advantage of it at the time. I didn't take a trade down here like I should have. But as you can see, back the week in mid-November back in 2020, we had a big gap here between these 2 weeks. Now price did barely come and tap the high of the previous weekly candle, but still that's a large opening gap there between weeks, and so there was a lot of fuel there, because when price, and you can see on the chart that price did break into that gap between the open and close of those weeks. It bounced around for 2 weeks and then it took off with a lot of momentum. It created these fair value gaps, these imbalances, if you will, as it broke this weekly structure here. I don't have that marked up, but technically, I mean, it's not for me, it's not structure because there was no candle. Well, maybe there was. Okay, yeah, so we had a structure break there. So that was a candle closure above. So that was a weekly break of structure. That was created by this. Excuse me, I didn't have everything drawn in here. I'm a little funny about my keeping up with my chart. There we go. Break structure, open this back up, kind of get everything moved into its proper categories. Y'all just excuse me. All right, so the weekly demand zone, the weekly imbalance. We can just quickly go back and review what happened at the beginning of last year. We had this move up, break of structure, retracement, and then a liquidity grab. We wicked above this high, so a liquidity sweep, and then a lot of momentum, a lot of bearish momentum here. This imbalance in this candle, we broke this structure with a wick. We retraced. Now, as you can see, we do still have imbalance right here, right below this weekly supply. And we did create, some structure here. This was a strong area of supply. This gap there, a lot of momentum to the downside. So we didn't quite reach that gap. We got into this area. We dumped again, broke this structure. So here to here, broke, retraced, mitigated this weekly supply zone, broke again. We had created these relatively equal highs here. Price broke that, relatively equal highs, and we got this big push down to the gap like we had talked about. So needless to say, this is where the last several months we've been spending our time in this price leg. Drop down to the daily and kind of look at where we've been. I will say this, this gap up here, don't forget about this. Don't forget about this. Market sentiment has been basically everybody calling for a recession and for a price to test these October lows. And that has been mine as well. That has been my expectation. I don't trade my expectations. I trade the chart. But I mean, just as a prognosticator, I have been looking for price to come out of this, consolidated here for a couple months and then broke down. So obviously we would expect it to retest this range before breaking lower. So nothing has really happened to make me question that, but you can't deny the fact that that this gap in this weekly supply zone that has not been mitigated is still sitting here. So and it wouldn't take but a couple weeks of price action. We had these three these 3 weeks. You take 3 weeks like this and you get a wick way up here and tap into that gap, and you can dump right back down, and that would really shock the system in both directions. And so we know that's what the market likes to do. It likes to shock the system in both directions. So not that I think that's what it's going to do, not that it matters what I think it's going to do, but that is a possibility. So that's our weekly zones, and I will throw our daily zones on there now. I need to label this one. Daily supply, where is it? Right there. And let's drop down to the daily and see where we have been in this current price range. All right, so this is where we've been for the last several months. Just briefly kind of go over where we've been, what we've been looking at. So we had this, a break higher, a pullback, good mitigation, a break higher, and then we pulled back and broke structure here. This is a legitimate break of structure, and then we wicked above this high to sweep liquidity. We hit this daily supply zone. We hit this weekly supply, we hit the 50% mark of this weekly supply zone, or at least if we didn't, we got close. Let's see. That is not what I wanted. So not quite 50%, but we got close. So regardless, liquidity sweep, and then a lot of momentum imbalance on this push lower, created imbalance, pulled back, couldn't get a break down below, swept liquidity, finished mitigating this big wick, and then we got a momentous break to the downside. This leg here started at this structure point. So we had the push up, swept liquidity, push down with imbalance. There's imbalance here in this. Don't believe there's any imbalance here that hasn't been filled in. That was maybe a very small imbalance there, but there wasn't much to it. Needless to say, there was a lot of imbalance here. Price couldn't break these relative equal lows, pulled back, created structure, and then with a ton of momentum and imbalance, broke that structure, dipped into this, where's my weekly imbalance? Get that back over here, get this back over here. Price wicked down into that weekly imbalance on the daily wicks before heading back to the top side. We've got this big daily supply zone, obviously, that was responsible for the break of these relative equal lows. And then we have this big daily supply range here between these candles that was responsible for it. There was a lot of momentum in this move, but it really didn't break. This move here did not break anything external. It just broke this internal structure. It didn't break these relative equal lows, but this did. So needless to say, that's going to be an important area to watch. I will say that I was not anticipating this type of momentum coming up into this supply zone. So I'll be interested to see the next couple days as the month of April starts what our price action looks like. We'll drop down quickly to the 4 hour. Put our 4 hour zones on here and kind of look and see what we have. So you can see that I had a 4 hour zone marked here. Price did not, I think it barely stayed away from it. I didn't quite hit the 50% mark, I don't think, of this. No, that was just below the 3% mark of that imbalance. But I talked in my last video about the buy signal that we created, so I'll briefly go over that real quick. I don't have it marked up on the chart. So what we did is we had this push, pull back, push down in the gap, or in the imbalance. Technically it's not a gap, it's an imbalance. Push down the imbalance, pull back, wicked down below. All right, so we had this wick of this low here that we will call a liquidity sweep. This was the structure that was responsible. That's why this is a sweep, because it then broke this, and I will call this a break of structure, even though technically I like candle closures. We had a pullback. We did not invalidate this low here, so we were still good to go. And then we did come up again with a lot of momentum and broke that structure, which was indeed structure, and we broke that with imbalance in more than one place. Tapped into this 4 hour supply zone, went bearish, tapped back into this 4 hour demand wick, and then we headed to the top side. Those of you that may have been hearing the term flip zone, I will kind of briefly describe what a flip zone is here with this example. Here we had price, like I said, wick into this demand zone, which was a strong demand zone, a lot of imbalance afterwards, a lot of imbalance in this candle, obviously a strong bearish candle. We wicked up into it, pushed lower, created this structure. Okay, so this supply zone is a relatively strong supply zone, even though it did not break. It did break this 4 hour structure, but it didn't break this 4 hour structure. But regardless, price pushed up into it. We got a reaction that created structure, and then it broke through. Okay, so this is where price flipped. We had demand, and demand was strong here, and then we had supply flip into demand. All right, so we had a break of structure. So we've got supply. Technically, if you want to count that as a break of structure, which that is a structure point. So supply is in control, right? Demand's in control, and then supply flips to demand. So this 4 hour zone becomes what's called a flip zone. Now, I'm not a teacher, and I was in the Phantom course, and so I'm sure there are better ways to explain it, but that's how it's um, a rough explanation of it. Okay, so within this daily supply, we do still have the 4 hour, this 4 hour candle that is there. Let me put our opens up on here so we can see what we're looking at. And this is one reason that I was, there's another open up there somewhere that I have not marked. I know there's an open in here. Let's see where it is. All right, so right here. All right, so this is, needless to say, a very important open. This is Tuesday, March the 7th, a previous Tuesday open. And then this was the Monday open from the day before that. All right, so that's a lot of liquidity there between the 4 hour demand zone, 4 hour supply zone, and these two previous opens, one of which has not been traded through. Okay, so as you can see, these areas I have marked are the opens from the very beginning of the year, the Asian Open from the first day of the year, the New York Midnight Open, and the NYSE Open from the first day of the year. I have all those marked. I'll go back to the 4 hour. I'm not really trying to get too low on the time frames here. So I'm still going to watch for price. If price, slows down here and creates a consolidation, whether you want to call it a Wyckoff distribution schematic, and gives me an entry signal here, I will be looking for shorts in this area. I've got these 3 4 hour demand zones lined up down here. Technically, if you look at this as one big bullish leg, and you're looking for premium or discount pricing, then you've got really just this flip zone, this 4 hour supply zone. What am I doing? That's 4 hour demand zone. 4 hour demand zone here. Get these opens back off. And that's not even marked. Oh, that's the relative equal lows. So why is it green? This should not be green. That's relative equal lows. Oh, I know why. Because I have it as what? A horizontal ray instead of a horizontal line, so it's green instead of blue. All right, so, and these are the kind of confluences I look for. Sorry, I got sideways. As y'all can see, I'm not professional at this. I'm just seeing this for the first time. So that relative equal low line lines up perfectly with this 4 hour demand zone. So that's significant for me. It just adds confluence to that zone. Let me see if there's no price level. Yes, there is. All right, so this is Tuesday. This is on the 28th. How do I have that on my chart? I must have accidentally deleted it. So that's Tuesday open. Tuesday. And then, yeah. That was Wednesday there. I just haven't updated my chart this week. I use 2 different charts. One of them matches my Forex funds price feed better, but it only goes back, the chart data only goes back like 18 months. This one goes back a lot farther, so I don't mark this one up quite as much. So that's Wednesday. Okay, Wednesday open. So there's a lot of confluence here. This is going to be a real strong zone that I'll be looking to take longs from when it gets back down to this price. I mean, obviously that's 1,000 points away from where it is now. But as far as the 4-hour zones, if that's what I'm using now, if you want to drop down to the 1 hour and look for some possible entry points, we did have 1 hour structure created here. That could be a legitimate point. That is also in confluence with this midnight open from the beginning of the year. It's crazy how price reacts to these places. If I hadn't been watching it for so long, this is the only pair of trade, so I watch it a lot, needless to say. I wouldn't think that it was such a big deal. I don't even know if I have 1 hour on here yet. Well, I sure don't. I generally don't watch 1 hour too much. So anyway, that's just a quick, not quick, 20 minutes breakdown of the chart here. And I got a little too farther into it, and I guess I wasn't quite as prepared as I thought I was. But needless to say, I'm not a professional at this, and I'm not doing this to pretend like I am. But if anybody has any feedback, I would appreciate any feedback on my chart work. Any mistakes you see me miss, please point that out. That's part of the reason that I do this. It's kind of self accountability. It's really helped me in the past several months that I've been, really kind of turned the corner in my trading. And once again, if you wouldn't mind dropping a comment about whether you would prefer or what order you'd prefer them in, whether trading courses and communities, a review of the prop firms, or my journey to where I am today, in a relatively short amount of time, just let me know. And thanks for watching.